Okay. Everyone, just a quick sound check. Sorry for the delay. We're gonna get started soon. Just let me know if the audio is coming through okay. All right, audio seems to be good on my side. Just let's get started here. Okay, welcome back to the second part of news trading session. This is going to be a theory and practice. We're going to go through a few of the order types that we are going to be using when we are trading the news, and explain a little bit more about news trading. It's kind of different from fundamental analysis to a certain degree. All right, everyone, my name is Virenjaro. Let's get this started. All right, just a quick disclaimer. Any opinion, news research, prices, analysis, or other information discussed in this webinar or linked to this presentation is provided as a general market commentary and do not constitute investment advice, so just keep that in mind. All right. There's going to be a promo code to double your deposit bonus at the end of the session, and then there should be an access to the private Telegram channel if you register through email. If you don't register through email, you should be registering through emails, because otherwise you're not really maximizing your benefits here. All right, let's take a look at the rundown on what we're going to be covering tonight. We're going to take a look at the advantages and disadvantages of news trading. Obviously, the most profitable news trading scenario that could well, not really the most profitable, but I guess the most volatile news trading session that we're going to take a look at. News trading and price action, what are they, how are they related? General rules for news trading, and then we're going to cover the buy stop and sell stop strategy, which is something that we have employed last week and pretty much the past 4 months during our NFP sessions and our CPI sessions. And then we're going to touch base on the buy limit and the sell limit strategy as well. There are some certain use case scenarios where we might need to use the buy limit and then the sell limit strategy, but most of the time you're going to be looking at the stops strategies. All right. Okay, so the promo code that you can use, it's going to be non-farm 2023. Don't just ignore the promo code. It is valid until the end of 2023. So it's non-farm 2023 that you can use this to double your deposit bonus when you deposit, obviously. So yeah. If you deposit and you're not using the bonus, you're kind of really missing out. All right. So the code again is non-farm 2023. It's valid until the end of 2023. Okay. So let's take a look at the advantages and disadvantages of news trading. Obviously, we're going to touch base on the advantages first. Now, I think the major advantages for this one here is that all the necessary information can be found in the economic calendar. So there's no need to delve deeply into the technical and fundamental analysis. Yeah, to a certain degree, yes. Rankings of calendar events by importance aid in making informed decisions. This is obvious, right? When we talk about news, not all news are created equal, and not all of them have an impact into the market. And we are basically going to be focusing a lot more on the high impact news, and I'll show you the calendar on how we can actually filter it. Okay. Statistical reports release can significantly increase volatility, leading traders to potentially earn large profits, and at the same time large losses as well if you don't get into the right side. The simplicity of fundamental news trading, you don't have to learn complex technical analysis tools or to draw the most complicated shapes on the chart. If you do have that knowledge, then obviously that's going to help, but you don't need it to a certain degree when it comes to news trading. You basically need to be able to follow the economic events in the calendar and make a trade based on the news release and close it based on the market reaction. That's typically what we do during the first 30 minutes of NFP release or the CPI release. All right, and we have to make that decision. And when trading based on fundamental news, there's often a minimal time expenditure required. Traders know exactly when to go to the trading platform and what actions to take based on the news release. Now, the trading process itself can be completed within just a few minutes, allowing traders to efficiently make trades and move on to other tasks. Those are the simplified advantages when it comes to news trading. Again, I want to stress this out. News trading, the kind of news trading that we're talking about here, it is not fundamental analysis. It's a completely different thing. News trading is basically just trading the news release or trading during news releases. And that's basically what it is. All right. How does it simplify things? Because we're looking for breakout in a range, and that's why we use the order types. That's pretty much it, right? The disadvantages. When it comes to trading, it's important to remember that the market can be unpredictable and doesn't always follow logical thinking or common sense. I guess there are several scenarios to this, but we'll touch base a little bit later. So even if a certain outcome seems logical and probable, the market can still move in an unexpected direction, causing losses for traders who didn't account for this possibility. Now, I'll just bring up the example from our NFP live last week on Friday. So we've got an NFP number that kind of surprises the market. Okay, it is below consensus. There was downward revision from the previous number, so it's all a complicated mess, and it does take time to kind of understand and get through that data. Now, the initial reaction to such a confusing number obviously causes a little bit of a whipsaw, meaning the market kind of goes down and take the order on the downside, and then whips out the other side, takes the order on the other side, and then it goes quiet for a little bit. So we have that whipsaw happen on the NFP last Friday. We had the same scenario happen about 2 months ago. I believe that was during the NFP or the CPI number as well. So even though we come in prepared and everything, there are going to be risks involved, right? There could be slippage that happens. There could be spread that widens, and it basically just takes out your orders, and then it goes flat. There's a lot of risk involved because liquidity kind of dries up if the volatility increases as well. So you need to factor that in when it comes to news trading. Okay. When it comes to trading, not all news is created equal. I already mentioned this. Some news events may generate significant market volatility and trigger strong reactions, while others may barely cause a blip on the radar. If a trader is unable to correctly predict market direction or analyze the situation, they may suffer a substantial loss. So, can you earn a lot during these releases very quickly? Yes. Can you lose a lot at the same time? Yes. Again, it kind of depends on what's the stance that you take in the market and whether or not you have any prior knowledge about that data, what you're trading. We try to give out as much information on what it is, highlights the risks involved in trading certain news like the NFP, for example. It kind of whipsaws either way, or there might be a certain pattern when it comes to trading news. For example, the NFP, typically we see the market goes in one direction and it kind of fades into the other direction, and then after a few days it kind of normalizes itself again. Or maybe we look at the CPI number where if it's super positive, that's going to be boosting the US dollar. For example, if we've got the US inflation number, that's going to be directly impacting the US dollar. Does that have an impact on the other currency crosses, for example the yen crosses? No. All right, so there's a little bit of a confusion in terms of what you should be doing. News are not created equal. At the same time, what you're trading is also not going to be created equal. Some of them has an impact to a certain currency pair, some of them don't. For example, the NFP number was a pretty huge release. It doesn't actually impact the euro yen or the sterling yen a lot, right? But it impacted the euro USD, impacted the pound USD, but didn't budge the euro USD and the sterling yen. All right. So just keep that in mind. There are advantages and there are disadvantages when it comes to news trading. Now, what are the most profitable? I wouldn't like the word profitable. Maybe I'll change the slide for next month. But yeah, what are the more volatile news for trading where you can have that potential opportunity in the market? Okay, but you need to understand what kind of news you're trading. So we're gonna split this down into two. There's one. That's hot, right? This is unexpected news, which includes terrorist attack, military conflicts, war in Ukraine, Russia that doesn't come on schedule. It was a surprise to the market. Maybe the Gulf War, maybe the 9/11 terrorist attack. Yeah, that wasn't all that wasn't scheduled or anything like that. We know nothing about it. For example, maybe the earthquake and tsunami in Japan that causes the Fukushima reactor to kind of melt down, right? Natural disasters that leads into something else. Those are stuff that we don't know. To some degree, we cannot basically predict it, right? COVID, for example, that wasn't predicted when it's going to hit, right? It happens. We don't know how it's going to spread. And then Obviously, we saw the world shut down for 3 months. Does that cause an impact into the market? Yeah. As trading goes on, yeah, trading still goes on, but it does causes a lot of impact, and we can still that impact up until now. Okay. So just think about it. There are going to be those unpredictable geopolitical news. We will categorize them as hot, right? Natural disaster, geopolitical tensions, whatever. We're just going to categorize them as hot or unexpected news. And then we have the periodic news that comes out regularly. For example, quality reports of the companies and everything that goes along with it. We've got central bank meetings, monetary policy decisions, right? Foreign exchange markets react to them by raising and when they raise and lower interest rates. We've got the quarterly GDP reports. We've got one coming out from the UK on Friday. So these are scheduled reports. We've got inflation numbers. We've got the CPI on Thursday, which is on the 10th. We're going to be doing a live session as well. And then on Friday, the 11th, there's going to be the PPI numbers as well. So these are scheduled events, right? Indexes of business activity in manufacturing and services. We've got the ISM manufacturing. We've got the ISM services, PMIs, right? Unemployment data. We got that from the US last Friday. That has an impact into the market, but it's not really a surprise because we know the schedule. We know the consensus of what the market is going to be thinking of the result. For example, the CPI number this week. A lot of people are anticipating the US inflation number to pick up a little bit from 3% to 3.3%. So these are scheduled events, all right? This is periodic news, statistical news. We know when it's going to happen. There's no surprise. We know when to be in front of the computer to trade it, right? So these are the news that you want to be trading. You don't really want to trade the unexpected ones because we don't know how the market is going to react to it. For example, let me give you an example. The collapse of SVB that happened this year, the collapse of Credit Suisse that happened this year. We've got the merger with the UBS and stuff like that. Those are stuff that we don't know how the market is going to react to it and stuff like that. Maybe the downgrade from the US Fitch ratings, for example, from AAA to AA plus, I believe the downgrade was. That wasn't expected in the market. Okay. All right, so let's take a look at how price action is at the times of the news release. So we basically categorize them into three main phases. We've got the consolidation phase, we've got the development phase, and then we have the termination phase. So let me just bring it up. I'm just going to go straight into the chart and just show it to you on the Pound USD, right? So this is what happened during the NFP numbers, right? So we have the market consolidating, right? And then we have the NFP number. You can see we created a range. It kind of takes the support, takes the resistance, and it goes up. Look what happened when the market goes up. It just happens for a little bit, right? And then it kind of slows down a little bit. Okay, so we've got the three phases here. We've got the consolidation phase, we've got the development phase, and then we've got the termination phase. And you can see it very clearly on the NFP number, even though there's a surprising outcome from the NFP, it does still, to a certain degree, form the same pattern, right? We've got the three patterns: consolidation, development, termination, right? We've got consolidation here. Development is when the market is moving, and then we have the market that's kind of, quiet down a little bit. That's the termination pattern, all right? And then the market fades back. Okay, cool. Give me 1 second, guys. Okay, so general rules for news trading: you need to basically study the market and the dynamics of currency pair, even though you don't need to go into the deep end on the technical analysis or the fundamental analysis, but you should be trading something that you're familiar with, something that you're comfortable with, right? You want to study the reaction of currency pair to that latest news. For example, I can give you the reaction on the Pound USD here. We have that spike that happened and whatnot. But if we take a look at the sterling yen, we don't actually see a lot going on, right? There's no accumulation, there's no development, there's no termination. We see literally nothing of that sort on the pound, the sterling yen. So it moves differently to if you compare it to the pound USD, it's very different. The pound USD, it's kind of readable. The sterling yen itself is not. All right, there's no patterns or anything like that. The Euro USD, you might see the same thing happen with the different phases. Okay, so we got the same thing that happens here. We've got the consolidation that happened, and then we've got the development that happened, and then there's that termination phase at the very end of it. Okay, so we see that pattern happening on the Euro USD and the Pound USD because they're directly impacted by that news, but not so much on the sterling yen, for example. Okay, all right, let's move on. So prepare for trading. You need to basically mark the levels on the chart, and we can do that by highlighting those accumulation part that we saw, the consolidation part. And then we need to decide on what we're going to do, right? When are you going to open that and close the order? For example, you want to use a working time frame. I was using the 15-minute time frame just now. On the hourly time frame might have a different scenario. You need to determine the maximum risk of a trade. Think about using stop loss and trading stops if you need to. And you need to decide in the terms of the deal, right? Is that going to be a quick trade, or is that going to be a long-term one, which is going to last you more than an hour, more than a day, more than a week? You need to make your decision before you trade. Okay, so there are going to be two order type that we're going to explore tonight. There's going to be the stop orders, and then there's going to be the limit orders. Okay, buy stops are order placed above the current market price, and if price is rising up, your orders are going to get triggered and you're going to go long, right? You're going to buy that asset. Sell stop are orders that's placed below the current market price, and if price is falling down, that's going to trigger that order, and then you are going to go short on that order. Okay, those are your two main order types. And then we have the limit orders, right? For example, the sell limit are order placed above the current market price, and then market hits it and you want the market to go down. Buy limit is an order placed below the current market price. You basically want that order to be hit and then the market goes up. Okay, we're going to explore that in a little bit more detail later on. But there are certain case scenarios in terms of using the limit orders. In fact, I think tonight, hopefully, we can explore a little bit on the sell limit orders. Okay, so let's take a look at this one here, just a little bit of an example. So we have that corridor of volatility. That's basically a consolidation phase. We see the market quiet down a little bit. And it's range bound, but you don't know what the release of that news is going to be, right? You don't know whether it's going to be a movement to the upside or is it going to be a drop to the downside. So just in case, if you need to step out from in front of your computer, for example, I might have to go into a meeting, or I need to probably have my dinner with my friends. I just can't be in front of the computer during the news release. And then I can look at the market and I can set up a buy stop, right? If the market breaks to the upside, it's going to trigger a buy position for me, or a sell stop. If it drops to the downside, it's going to open a sell position for me. Okay, so once you set that order, you can actually leave it alone. You don't need to be there looking at the screen. This is useful if you want to be trading a few currencies at the same time, right? At the time the news gets released, the market does move very quickly. Sometimes we just don't have that reaction time. Sometimes the market just moves a lot within the first minute. So, for example, if I'm going to be trading on 4 currency pairs, on the Euro USD, the Pound USD, the Dollar Yen, and the Aussie USD, for example, I might be manually looking at the Pound USD, but I wouldn't have the capability to manage all 4 trades and execute them at the same time. So we can use this order type if you want to execute them at the same time that breakout happens. Okay, so number one, you need to highlight the range. So we want to know what the corridor of volatility is going to be, and then the news gets released, one order gets triggered, you need to close the other orders. Okay, otherwise we're gonna get we really don't want to have both of these orders open. This is probably the worst case scenario, and that's basically what happened to us when we were trading NFP live. We've got the buy stop and the sell stop triggered at the same time. We just don't have enough time to close the other orders, so it actually opens up both orders. And I was completely hedged. I need to figure out when to get rid of that position and then when to fade the market and stuff like that. Sometimes we can do that for the NFP numbers. I managed to fade that on Monday. We managed to fade it, but not all news are going to be reacting the same way. Not all news give you that opportunity to fade the market and stuff like that. So just be very careful. All right. Always keep an eye out. If one of your trade is executed, you need to close the other orders. Otherwise, you're gonna get whipsaw, and then both orders are gonna get open, and then you're gonna get hedge. Okay. So in this case, the buy trade is triggered. We need to close out our sell stop orders, and then we set our stop loss. We set our take profit target. Okay. Once it's profitable, you can move your stop loss to break even, or basically zero risk, right? Because once you do that, even if the market goes against you, you're going to be taken out at the place when you open the order. So there's not going to be any loss there. So you want to do this as soon as possible if you can, right? You want to move your stop loss to break even as fast as you can. And that's it. That's pretty much it. Okay, so let's take a look at the market here. Obviously, there's not any news today. So I'm going to bring out the calendar first and just show you what's going on today. On Monday, if you take a look at the calendar, I'm using Trading Economics. All right, on Monday, there's nothing going on Monday. There's no high impact news on Mondays. If we, kind of filter it out with a low impact news, medium impact news, there might be something there. 7:30. In 2 minutes time, we've got a speech coming up from Fed Bostic. So any hawkish comment from them, that's going to be a plus for the US dollar. So maybe let's take a look at that. Okay, so we've got that speech coming out in 2 minutes time. So we've got the Euro USD and the Pound USD, for example. So maybe we'll go with the Pound USD, and we want to create a range, right? So this is going to be our range, and this one here is going to be our range. So what I want to do right now is I want to create a buy stop order at the top there, and I want to create a sell stop order just below here. Okay, just below the range. I'm gonna get rid of that, right? So we kind of figure out, okay, this is going to be our range for the market, and if it breaks out of the range, I'll just adjust this a little bit higher. If it tap my buy stop, it's gonna open a buy position for me. Maybe we can do the same thing with the Euro USD. I can do the same thing. All right, let's identify the range first. We want to look at this range. Okay, so we want to create a buy stop just above there and a sell stop just below here. So we've got that, right? If the market hits it, then we're gonna go to the upside. So we're gonna pay close attention to our orders. If any of them are gonna get hit, maybe I'll do one on the 5 minutes time frame just to give you a quick one, or maybe on a 1 minute time frame, in fact, that we can use. Maybe if it breaks below 142, I want to go short on the Dow yen. If it goes above 142.25, I want to buy. So I want to create that range here on the Dow Japanese yen, right? So we got a couple of orders lined up. All right, now we just wait and see. Any of them hits, we want to close the other side. Obviously, because it's a speech, it's going to take time for that speech to come out. It's not going to be an instant reaction. Okay, so let's go back to the calendar again. And we don't have a lot going on Monday. In fact, if I kind of filter it out, all right, I can have all news, and that's going to be a lot of news, okay? But all those news are not going to be important. So we want to highlight the most important news. So we want to go with the high impact news first. And for the high impact news, we're not going to get anything until, not a lot of people are going to be trading consumer confidence tomorrow from the Australian side. The Chinese trades really depends. If you're trading gold, if you're trading oil, if you're trading in the Aussie dollars, then yeah, the Chinese balance of trade inflation rate is going to have an impact, but it doesn't have an impact on the Euro USD, for example, or the Pound USD. All right, and then obviously we don't have that until Thursday, where we have the inflation number. We're going to be trading live on Thursday, so if you missed out on the NFPs, then you might want to join in on the Thursday session. Is it every high impact news will make big moves on the market? No. As I said, it's not going to create a lot of impact, and it doesn't have an impact on all currencies. It have a different impact on different currency pairs. Okay, for example, on the Fed speeches coming out soon, we want to focus on the Euro USD and the Pound USD. I'm very sorry, guys. I do have a little bit of a cold, so I'm having a very stuffy nose here, very hard for me to breathe. So bear with me here. I'm not making all this weird and gargling noises for no reason. But yeah. Okay, so for the Fed comments, that's going to impact the Euro USD, that's going to impact the Pound USD, that's also going to impact gold. So if you are trading gold, then you also want to highlight what's going on here. This one here, we do have a little bit of a range that we can play with, right? We can also have a buy stop just up there. We have a sell stop just on here. But just to illustrate how it works, so let me just create a buy stop here. A little bit higher, yeah. I need to have it a little bit higher, otherwise it's not going to trigger it. Okay, all right, so we've got a buy stop there and we've got a sell stop here. Hopefully the market has enough volatility to hit it, but on Mondays we typically don't have a lot of volatility. So yeah, when there's no news releases, it's kind of pointless doing this buy stop or sell stop orders if in a certain range, right? Unless you're looking at it from a technical perspective. But tonight we're talking about news trading. So if we don't have that news, that's not going to be that entry that you're going to be looking at, because orders are not going to get hit if there's no news to move the prices in the market. And this is why we want to focus on the high impact news, because if you look at every single news and they have medium impact or have zero impact on a certain currencies, you're not going to get your orders triggered because it doesn't move the market. We need that news to trigger that volatility in the market. If there's no volatility, you're not going to be able to trade based off these buy stops or sell stop orders. It's not going to work that way unless you're doing it from a technical perspective, which is a completely different webinar that we're going to be talking about. Okay, but just to give you an illustration on basically what happened last week, we have a order here. Right, we've got a buy order there on that line there, and we have a sell stop down there. Okay, so what happened there was that if you take a look at where it is on the Euro USD, it kind of hits that line. So I wasn't giving it enough room. If I were to adjust it lower, for example, then my orders wouldn't get hit. I'll be okay. So it's always good to give enough orders. Now something got hit. I've got a sell stop on gold, so I need to close my buy stop on gold, right? So I got this one here, one at 1937. I need to close out that buy stop. Okay, I'm gonna leave the other stop orders there. So we've got one here. This is triggered, right? I've got a sell on gold. I'm gonna have my stop loss now just above that 1937, and in terms of potential target, maybe I'll go for about 1933. Like, simple as that. You can cancel the other orders if you want to. We'll just go to the order type and then just delete all the other orders that we have. So we already have one running trade on gold right now, which is a sell stop. This is probably not going to be accurate because I was looking at it from a 1 minute perspective, which is going to mean that it doesn't mean a lot. Okay, but it is what it is. Let's take a look at this one here. We've got trade being positive right now, so I want to start moving my stop loss to break even. So anything happens right now, I'm not going to be taking at a loss. All right, I'm already in profit, so I already moved my stop loss. No, I can't move my stop loss. I'm sorry, it's the range is too small because I'm looking at it from 1 minute time frame. But if you look at it from a 5 minute time frame, stop loss is there. Okay, so this is just an example. Probably not the best example because you're looking at a 1 minute time frame. It doesn't really mean anything. I much prefer a 50-minute time frame. So just in case if this cat hits, I'm gonna have a buy stop there and I'm gonna have a sell stop here. This is probably still the more logical way of looking at it. But yeah, I got my stop loss, I got my take profit. If it hits, then it's fine. I've got my stop loss to protect my position from anything. Okay, cool. The rest, we don't see a lot of movement. Euro USD, Pound USD, we've got nothing being triggered. All right, so that's pretty much it. That's the sell stop and the buy stop and the sell stop order. Just an example, we got that triggered for gold, just to give you an illustration on how it works. Okay, so what happened was that it went down, hit the sell stop. We've got the sell order triggered, right? Immediately closed the buy stop and then place your stop losses, place your take profit, and then just let it run. Okay, let's continue. We're going to be looking at the buy limit and the sell limit strategy. So you're basically looking at previous high. So you need to know a little bit about technical analysis if you're going to be using the limit orders, right? At the very least, you need to understand where the support and resistance is going to be, right? Sometimes you might even use the word supply and demand zone, which I don't really like using supply and demand zone. I'll just prefer using resistance or support area, right? But you need to understand a little bit on how price action works. And I believe we've got a couple of webinars that explain that already. But yeah, to use limit orders to a certain degree, you need a little bit of a technical background, right? So your technical analysis, at the very least, you need to understand what price action is going to be. So we're taking a look at the previous high, for example, here, and the market is down there, okay? So what you're anticipating is that, okay, if the market goes up to that resistance area, we expect a lot more traders to come in and short it. We expect the resistance to play out. So we are going to create a sell limit, okay, or a pending order at that level. Once price triggers that orders, okay, you are in for a short. Okay, so basically you're anticipating the market to go up, hit the order, and then go down further. All right, once that order has been hit, obviously you can move your stop losses, you can set your target level if you want to, but yeah, you basically need a certain degree of technical knowledge to be able to understand the buy limit or sell limit order. So I'm going to try and explain it the best as I can. Okay, so I'll cancel gold orders for now, just to give you less confusion. How about this? Order pound USD, maybe. Okay. So what I want to see is this. Let's cancel out the buy stop and the sell stop orders for the pound USD. Okay, I don't want that. Just to give you an example. By the way, if you want to create these orders, you can just right click on the chart, go to trading. Right, there's going to be a sell limit or a buy stop. Right. It does has a picture to tell you what it is. If you create a sell limit above price, it means if price hits that level, it's going to create a sell order. A buy stop above price basically is going to create a buy order for you. Okay. But if you're trading from a mobile phone, for example, you might want to click new order, and then there's that option there on the different type. You want to go with pending order, okay, and you want to create the limit order. So I want to create a sell limit order for the pound USD at what price is this? 1.2760. Okay, so I'm gonna go 1.2760, and I want to place it there. Okay, just about there. So if price goes back to that level, all right, just in case, if price goes up again, it's going to create a sell order for me. Okay, obviously you can do your take profit as well if you want. You can set it up as we go here. You can go double click that. You can go to modify order. I can have my stop loss maybe at 1.2780 maybe for my stop loss, and my take profit maybe I'll go for 1.2725, and I can just modify that. So once the order hits, if there's already a stop loss in place for me. Okay, which lowest time frame which is good enough for news trading? I would go 5 minutes. That's probably the lowest I would go. 1 minute doesn't make sense because there's so much noise. It basically means nothing, right? For the movement in gold, for example, we're looking at a 1 minute time frame. We zoom out a little bit, we basically see a market that is flat. We go into a higher time frame on the 15-minute time frame. We look at a market that doesn't actually have any movement. We go into the hourly time frame. It really doesn't move as well. Okay. So I would go with news trading. You want to create a range from the 15-minute time frame, because if we create that range on the 5-minute time frame, the range or the consolidation range, it's going to be too small. You don't have enough room for the market to move about a little bit, right? So you don't want to get orders taken out for no apparent reason. Okay, so I would go with 15 minutes. Personally, I would go with 15 minutes, but I'm not a scalper. So maybe you guys familiar with scalping, probably go with 5 minutes or 1 minute. I just don't like that period of time frame because it's too small. There's too much noise in there. It kind of blurs everything. Okay. So yeah, pound USD orders have just been open, right? You can see that. I wasn't even looking at it. The market goes up, pick up my order over there. Okay, so the order is already open. Since I already got my stop loss and everything sorted out, I've got my stop loss there. I got my take profit there as well. Okay, so the pound USD order has been triggered. I didn't even click buy. I didn't even click sell. I just placed that order. Price came to it, pick it up, and now we have a sell position for the pound USD. We basically anticipate the pound USD to go down. Okay, but that's basically the sell limit order or the buy limit order. It's really more of a technical know-how in looking at a certain level to be a resistance. From the perspective of 5 minute time frame, why do we pick that level? Because that level itself was basically where market has been having a little bit of a hard time breaking out on the 5 minute time frame, right? So we use that level to let's go short there, and just in case if it goes out a little bit higher, maybe above here, I want to have my stop loss there. Okay, if it comes back down a little bit lower, I want to have my take profit there. I can adjust that once the order has been open. Okay, very clear, very simple. Cool. All right, so you can also trade after the news gets released. For example, let me bring up what happened with the NFP first. So again, with the NFP, we're looking at the consolidation phase. We've got the development phase, and then we've got the termination phase on the pound USD, right? So if we anticipate that, potentially we could create a sell order up top if we want to, but obviously that's going to be hard because we don't know when that turnaround is going to be. However, there were clues given. Okay, if you take a look at where the rejection happens on the pound USD, where it turns around after the news, those are the previous resistance level on the pound USD. So it's to a certain degree, there's going to be that resistance. We already know where that level is going to be, so we can anticipate where to actually sell the market as well. So we can do that post news if we need to as well. Okay. All right. Let's do a quick test before we go into the Q&A session. If you can give me the answer, that will be great. All news can be divided into two categories. What are they? If you can type it in, that will be great. So we've been talking about the order types as well. What type of orders is most often used in news trading? Okay. And can you use ordinary indicators to trade the news? Okay, so if you can give me the answer, that'll be great. So you guys, at least I know you guys are paying closer attention. All news can be divided into two categories. What are they? If you can type it out. What type of orders is most often used in news trading? All right, we just explained that to you with a few examples. And also, can you use ordinary indicators to trade the news? Okay. All right, so we got an answer: scheduled and urgent, right? Or we can go scheduled and hot, right? Or unexpected. What type of orders? We've got stop orders. That's most often used in news trading, but we also have the limit orders. So there's stop orders and the limit orders. And for sure, yeah, you can use ordinary indicators to trade the news. Of course you can. If you have the technical know-how, it's going to help out a lot. Okay, if you understand the fundamental analysis or the context of that news in particular, that's also going to help out with your trading. So any bit of information, any bit of knowledge that you have about trading, obviously that's going to have a positive impact on your news trading. But the news trading we're discussing is basically if you're just starting out, you haven't delved deeper into technical analysis or fundamental analysis. Can you trade the news? Yeah, I would say yeah. For example, we know when the news is going to get released, right? The NFP is going to get released 7:30 in the morning in the US on first Friday of every month. That's the NFP numbers. That's the unemployment numbers. The CPI number is going to get released the week after that, for at least normally. Next month it's going to be a 2 weeks gap, but this week, yeah, instead of having it on every Wednesday, typically we had that on Wednesday. We got this week on Thursday. Okay. So yeah, if you know when those news are going to get released, that's obviously going to help as well. All right, 2 categories. Yeah, I know. It's divided into 2 categories. What are the categories? If you can type it in. Okay. So yeah, every bit of information helps. Every skill that you have is obviously going to help. Again, this news trading that we're trying to explain here is really for someone that doesn't have the time to go into the technical side of things or the fundamental side of things, but they want to trade the news. Can they trade the news? Yes, with a simple breakout strategy. Everyone can trade the news, but obviously there's going to be risks involved. So you just need to understand what those risks are involved, right? I'm not here to tell you, oh yeah, it's easy. You just do this and you're going to make a lot of money. It doesn't work that way, right? That's not how trading works. Trading is not really guessing a buy or a sell. That's not trading, okay? So don't do that. If you come to this video and you think, all right, this is a strategy to just what to do, buy or sell, it doesn't work that way, okay? That's not how trading is, okay? We're trying to figure out the best case scenario or the best way to actually trade news. Doesn't mean that this is going to work for every news. It doesn't. It's only going to work for high impact news, and you have to do it in the right asset class, right? For example, I'll just show you the impact on the Euro USD and the Pound USD. It has a different movement on the Sterling Yen, for example, because it's a currency cross. It doesn't have that kind of impact, not as much as the Euro USD and the Pound USD. Right? For gold, it moves differently. If you take a look at the movement in gold here, instead of creating a consolidation phase that goes flat, it actually goes in a diagonal. And also if you take a look at the termination phase for gold, it actually forms something else, right? So obviously if you look at the termination phase for gold, you can look at that as a pennant, or maybe you can look at it as more of a rectangle up there. But everything has a different different flow, so not everything is going to react exactly the same. So if you don't understand how to trade gold, typically don't do that. I think a lot of new traders are just really interested in gold because it moves a lot. If it moves a lot, if you get it right, it's fine, but if you get it wrong, it's also going to cost you a lot as well. So just keep that in mind. Okay, so market's just starting to move. Maybe the speeches are pretty much just about done. Do we have anything hawkish or not? Obviously, that's something that's, again, probably qualitative. It's not quantitative, right? For anything that's qualitative, like this one, like a speech, we kind of need to understand what it is, and then we have to interpret what that is, okay? Those are qualitative news. Obviously, those are going to be different, and those are going to be harder to handle. The CPI number or the inflation number, obviously that's going to be statistics, right? It's going to be quantitative. You already know the prediction that's likely going to happen. For example, the headline CPI this week for the US is expected to go up from 3% to 3.3%, right? We already know what it is in terms of the consensus. So market could start pricing in for a stronger US dollar. And if we get posted at 3.3%, obviously that's going to boost the US dollar. Anything higher than 3.3%, that's going to just rocket up the US dollar. That's going to smash the euro and the pound USD to the downside. Will my order be executed during news releases? That's the whole idea, that you can't handle a few different currencies, and that's why you want to have your orders done in. Okay, is it going to get executed? Yeah. It really depends on the situation. I'll just be frank with you, because if the news is huge, it might cause spread to widen a little bit. Sometimes your orders get filled, sometimes it doesn't get filled, depending on the spread itself. So just need to factor that in, okay? Yes, traders hate US dollar, yen. Weaker pre-US market open. Okay, so something just got hit on my screen. What is it? No, nothing. Okay. Okay, cool. I think something just got hit on my screen. I don't know. It kind of flashes a little bit. Nope. Yeah, I got my stop loss and take profit and everything. Yeah, still there. Yeah, gold's probably gonna get hit on my stop loss because we open it on the 1 minute time frame. Obviously, that has little bearings or anything. Schedule and the urgent categories. The urgent are natural things that happen unplanned, like earthquake, Ebola, etc. While scheduled news are the routine news that comes intraday. Yeah, scheduled are anything that we already have planned out. Those are scheduled news releases. Okay, good. All right, so again, you can use this code as LongFarm2023 if you want to use this code to double your deposit bonus. It's valid until the end of 2023, so you can still use this code. Just ignore that. It says 17th of May. We're past that, and it's still valid anyway. Okay, any questions so far? Yeah, we basically just did break down how to trade the news releases. That's basically the whole point of the webinar. But we're going to have a live example, which is on the US CPI. It's on the 10th of August. It's on Thursday. Okay, so US CPI is going to be on Thursday. It's on the 10th of August. We're going to be doing a live trade on the CPI. So if you want to see how we actually trade news, you can come in and join on that session. That's going to be on Thursday. So yeah, 3 more days to go. But yeah, if you want to look at the breakdown, that's basically what the whole webinar is for tonight. I can bring it back up if you want to, but we're looking at these phases in the market. There's going to be a consolidation phase, there's going to be a development phase, there's going to be a termination phase. And just to give you an example on those phases, which is highlighted here. All right, this is pre-NFP. So we've got the consolidation, created a range for the market, and then the breakout happened. That's the development phase, and then it terminates itself after 45 or an hour's time. What if price is not expected? You know, I really hate the new layout on the YouTube here with the emojis here. So I can't actually see the question. What if price is not expected and data is worse than the previous data? Well, that's basically what happened with the NFP numbers last week. So there's going to be different factors obviously involved in it. You know, to understand that, you know, I would say, you know, at least understand fundamental analysis. But you know, price is not expected, it's below the consensus, and data is worse than the previous data. Obviously that's going to depend on what data it's going to be. So for example, the CPI. Okay, let me just give you an example of what's likely going to happen. So we've got a CPI number. This is highlighted here. So we're looking at 3%, the previous number. We're expecting this to go up to 3.3%. If it goes up, that's going to be positive for the US dollar because the inflation in the US is still it still goes up, right? So the FOMC might need to continue hiking interest rate. So we're looking at the fundamental impact here, you know, kind of the effects in the market, okay? But if the inflation number comes in below 3%, that means the inflation is slowing down. It's coming down, and the FOMC might not have to hike another interest rate in September. That's going to be a negative for the US dollar, okay? But again, that's going to be different for every news that's going to get released. If you want to understand the context of it, then yeah, you need to learn a little bit more about fundamental analysis. But just for the sake of news trading, you actually don't need to. You just need to know the range, when to trade the breakout, and stuff like that. Okay? All right. So what's next? We've got news trading, which is on the inflation and CPI number, which is on the 10th of August. We're going to cover a little bit, explain a little bit to you what the inflation rate is, you know, what is the CPI, what's the PPI, what's the core inflation numbers, you know, and then we're going to go trading. We're just gonna live trade the CPI when the news get released. Okay, so come in early for Thursday. I'll explain a little bit more about the inflation. What are those inflation going to be? You know, where to find the CPI numbers, what to expect from the CPI numbers, what are the readings from the CPI number? Because when the CPI gets released, there's actually 4 components, and I've already given you a little bit of a preview here. We basically have the headline inflation number year on year, right? That's a year on year CPI, And then we've got the year-on-year core CPI, and then we've got the monthly change for the CPI, and then we've got the monthly change for the core CPI. So we're going to be looking at those four data. So at the very least, you kind of need to understand what's the inflation, how is that going to impact the market, and also what are the inflation index that we have, which is a PPI, and as well as the personal consumption expenditure index. Okay, cool. All right, guys. Any questions so far for tonight? But yeah, this is what's next. It's going to be on the 10th of August. So there was a question, can I break down how to trade the news releases? If you want to see how we actually do it, then join in on the session this Thursday. We'll go through that. Okay? All right. Cool. No questions? Good try, Zishan. We're not going to be doing a live trade or any outlooks today. We are actually at the end of the session, so we're just going to cover the news trading. So yeah, we're not going to be doing any live market outlook for today. I believe we have a different session for live market outlook, so maybe check the YouTube channel when the live market outlook is going to be. Okay. All right, then, let's wrap it up for tonight. Thanks for joining in. I'll see you on Thursday during CPI releases. Okay, so if you want to find out more on how we actually trade, just join in on that live trade with the CPI on Thursday. Okay, cool. Good luck with your trades.